Your weekly digest of the biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap on Friday, June 24th. I am joined today by Jordan Youl with Stonecastle Investment Management. Thank you for joining me, Jordan.
Yeah, it's good to be back. Thanks for having me.
I've had a lot of you. I like it. I like when you come visit. Okay, we're going to break down what's going on in the markets. I know that we continue to talk about, obviously, what we're seeing. We're entering troubled times in the market. So glad that we have you here to explain those charts and give us a little bit more understanding of what we're looking at. We're going to talk about the halftime report. You're going to explain what that is and what's going on, what we see from it. We're going to talk about asset leadership models. We're going to get into sector rotation and seasonality. We talk about that a lot. So you're going to explain what you're seeing there. And then, of course, we're going to finish off with some CSE issuer news. So let's jump right into it. The halftime report. What's going on?
Yeah, without question, it's been one of the weakest or most challenging time periods for investors, not only from an equity market perspective, but also from a fixed income perspective. So we do have a chart breaking down, how the market's performed moving forward anytime the S&P 500 declines by more than 15% during the first half of the year. And you can see that 2022 has been obviously a challenging period for investors, but the takeaway here is that the second half of the year, historically, the markets have been up 100%. And over that time period, the average return is just shy of 24%. So a lot of challenges that we've talked about over the last couple of weeks, with lack of market breadth and with the Fed and rising inflationary pressures and whatnot. But we are starting to see some subtle signs of improvement from a sector perspective, which I'll touch on momentarily. But obviously with the midterm election coming up as well, we anticipate stronger returns in the second half of 2022.
Well, I think that would make everyone very happy if that were to happen. Okay, let's talk about asset leadership model. What are we seeing there?
Yeah, so the asset leadership model is a relative strength tool that we created at Stonecastle. And effectively what we're doing is we're ranking different asset classes to one another using technical analysis. And we're really looking at technical attributes and comparing one asset class to another. And really what's happened is over the last couple of quarters, commodities without question have been the top ranked asset class when you compare them to cash or foreign domestic equities into fixed income. So when we rank the asset classes, the underlying ranks have not changed. But what's really interesting is if we compare domestic equities, foreign equities, cash, and fixed income, and we compare them to commodities, what you can see on the right-hand side in the relative rotation graph is that those constituents, those other asset classes, are exhibiting stronger signs of relative strength to commodities. So as equity investors, we effectively would like equities to be ranked in the number 1 and 2 spot. So that's beneath the surface internally that we're watching very closely. And for those of you that are not familiar with relative rotation graphs, there are 4 quadrants: improving, leading, weakening, and lagging. And typically the constituents or the tails within the 4 quadrants typically rotate in a clockwise fashion. You can see that the other 4 asset classes are moving in a northeast direction within the improving and lagging quadrant on a comparative basis to commodities. So we might be seeing a shift, changing of the guard in leadership from an asset management perspective.
Okay, I have a question for you because you talked today about the halftime report and the fact that we've entered June, we're halfway through the year. There's a saying in the markets called sell and may go away. When the markets are struggling, as they have been, do we still see that happen? Because markets can propel themselves when they're not doing well.
Yeah, absolutely. From that perspective, from seasonality perspective, it depends on the index and what you're actually looking at. The TSX, for example, has typically thrived and done well over the summer months, whereas the S&P hasn't fared as well. So it really depends on what you're investing in, because some sectors do outperform than others.
Right. Okay. And on that note, we're going to talk about sector rotation and seasonality. This is something you talk about a lot, so our viewers hopefully know what that means. But what are we seeing?
Yeah, so this is really fascinating and interesting, and I'll break down the 2 charts here. the value versus growth narrative has been in play for multiple quarters, where effectively growth, the biotech stocks, cannabis, technology have been under pressure for multiple quarters now, whereas the value sectors such as staples, utilities, even energy have really been thriving and outperforming the other sectors on a comparative basis over the last number of quarters. It's early because the long-term trend of the markets are still down and declining, but beneath the surface, we're starting to see some relative outperformance favoring growth to value. So the chart on the left-hand side is of the TSX technology sector, and you can see year to date it's been declining in a downward trend. But just recently this week, we've actually broken through that downward trend line. And in the lower panel at the very bottom of that chart on the left-hand side, we're actually comparing technology to the energy sector. So what's been really outperforming year to date, like energy, is starting to lose ground or relative strength to technology. So we're starting to see more opportunities outside the energy sector for new ideas. And at the portfolio level, as an example, we've brought down our energy exposure from high 20s to around 13%. And we've been increasing our technology exposure over the last couple of weeks and adding new names to the portfolio. So we're trying to capitalize on what the market's favoring and rewarding right now. So effectively, we are seeing a little bit of a rotation favoring growth stocks to value stocks that we haven't seen in multiple quarters. Now, on the right-hand side, from a seasonality perspective, you can see based on the annotations where technology typically generates positive returns in the summer, so in July and August, whereas we are starting to head into a seasonality weak period for energy throughout July and August.
That's so interesting. And I mean, technology has had some downward pressure, as you can see from that chart, for a while. So it's nice to see that kind of have some opportunity in the second half of the year. Okay, we're going to talk about some CSE issuer news. I'm excited to talk about our CSE issuer news today because we haven't talked about cannabis in a long time, Jordan. I feel like we have been talking about energy and commodities, the mining sector, but we haven't talked about cannabis. As you mentioned, cannabis has had a bit of a downward pressure. For how long would you say now? 12 months?
Oh, cannabis, probably longer than 12 months, probably 18 to 24, right? The cannabis sector in the small cap and the growth areas of the market performed well off the March low of 2020. They recovered remarkably quick. But yeah, cannabis, for example, has been that one sector that has really underperformed for the last, 12 to 24 months for sure.
And let's clarify underperformed. I mean, some of these companies are very well executed, high revenue generating companies. They have good value, but they're just undervalued in the market. They're just not in favor. So there's some great opportunities there, wouldn't you say?
Absolutely. And we touched on this maybe a couple of months ago, but the US MSOs, for example, the valuations are a lot more attractive today than they were several months ago. Their cash flow has been fantastic and the revenue growth has been growing at an exponential rate. Even in Canada here last week, the Canadian retail sales grew month over month, and it was the biggest jump month over month in retail cannabis sales that we've seen in Canada since December of 2020. So the cannabis sector, which has been really out of favor for the last couple of years, looks like it could be potentially catching a bid.
Absolutely. I also think that it takes time, when it does become recreationally available in a country, it takes time for people to perhaps wrap their heads around it. So maybe we're seeing that turn as well. So I want to talk about one of our CSE issuers, and that is the TNY Beverage Company. They are a great company. They've been around for a while. And I did a panel actually a few years ago and learned about the technology that has to go into putting cannabis infused into beverages. It's not quite as simple as one might think because it's not water soluble. So the technology is quite interesting around that. TNY Beverage has partnered up with Jones Soda. So for those of you who are maybe out west, you might remember that Jones Soda started, I think it was started in Vancouver. It's now since gone to the States, but it was one of our darling companies. I was reading an article about Jones Soda today, and they had about 10 rough years where they actually really struggled and almost died on several occasions. occasions. And they kind of were a comeback to life story, and they've just done incredibly well. They started out selling in tattoo parlors and kind of these hipster type locations. They have great different flavors. And so now they've partnered up with Tinley, and Tinley is going to develop their Mary Jones. So Mary Jane, for those of you who know, Mary Jane is a term for cannabis. Their Mary Jones soda. So these will be infused. So I guess the one thing I want to bring, so congratulations to them. This is a pretty exciting project. The question I wanted to ask you is, there was this big battle for these cannabis companies to develop the biggest brand, right? That was, everyone's racing to get to the biggest brand. Jones Soda is quite a well-recognized brand. It's been around for a long time. Do you think we're going to start seeing more of these partnerships where the companies that have the existing brands are going to partner up like this?
Yeah, absolutely.
Yeah, I mean, it's pretty exciting, and it's interesting because the beverage thing seems to be, for users of cannabis, it seems to be of intrigue, because I think there's lots of users of cannabis who choose not to drink alcoholic beverage. So I think it's a bit of a social thing for them. But there's a lot of excitement around the infused beverages. So congratulations to them, and hope they do well. What should we think about this weekend, Jordan?
Looking forward to a nice weekend here in Kelowna. It's supposed to be 29, 30 degrees. But for next week, we're going to keep our eye on OPEC. They have a couple meetings next week, so we're going to keep our eye on oil. Obviously, energy stocks have really struggled over the last couple of weeks. And we'll see if the market has some follow through. Obviously, the markets have performed very well this week, but we'll see if we can string a couple consistent positive week over week in the equity markets as we head into I guess Q3, right? We're going to have some quarterly and month end rebalance next week. So we'll see how everything settles out next Friday.
Well, here's hoping. Jordan, it's always such a pleasure to chat with you. Have a wonderful weekend, and we'll talk to you soon.
Yeah, thanks for having me.